Hello and welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and we have Andrew Cox back with us, and he's going to give us a DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with the Carrier Update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Carrier Update presented by PowerFleet. I'm Zach Strickland. Looking at our outbound tender rejection index for the United States year over year. We've been talking about how we found a floor in our tender rejection rates over the last couple of days. You can see that it dropped dramatically there after the holiday from about that 28% rejection point all the way back down to about a 25%. Now we've been bouncing around 25% for the last 3 days. We had a little uptick yesterday and a little bit of a downtick today. Not a dramatic swing by any means in terms of overall rejections. Of course, the higher the rejection rate goes, the increased rate pressure on the spot market grows. So, year over year, we're looking at what traditionally happens is a seasonal peak that occurs right before the Christmas holiday, or right on Christmas, if you will, because a lot of carriers, of course, pulling their drivers off the road, a lot of drivers getting bound into small little areas so they can get their home time, and driver retention and recruitment, of course, of the utmost importance this year, as the schools have been shuttered for a while and operating at half capacity. So we want to make sure that the drivers get home and are happy. That tender rejection rate may be hovering around 25% right now, but if you look here in about 5 days' time, we should start to see that tender rejection rate increase yet again. December 15th seems to be that magical date where rejection rates start to increase, and significantly so from where they were. And traditionally, we're talking about values much higher than Thanksgiving. So we hit 28% around Thanksgiving. We're probably going to break through that, hit about 29 to maybe even 30% for the first time ever with our rejection index. So carriers out there certainly expect a little bit more action on the spot market, at least with the rates here over the next several weeks or so. So we've got about 2 weeks of that activity to kind of ramp into, and we are in this kind of lull period right now at the moment. Looking at the most volatile markets in the United States, I've got them listed from top to bottom in green. You see there's a ton of red on that map. That's an indication that most of the markets have actually seen lower rejection rates week over week. This is not something new, but of course we were still coming out of that Thanksgiving period, so of course there's plenty of red on this map. There are only a few greens right here showing moderate increases in Springfield, Massachusetts, Las Vegas, and Cleveland, Ohio, all showing the only real significant increases of rejection rates here over the last bit. Looking at Springfield, Cleveland, and Las Vegas, you can see that these bounces are not necessarily that big. We're just kind of edging up. These are markets that are not very high volume. Cleveland, the largest of these three markets, if you look over there on the outbound tender market share map, occupying about 1.5% of the total outbound volume, or total outbound tender volume in the United States right now, and that is increasing here over the last few days. You can see that Springfield and Las Vegas, nowhere close to the size of a market that Cleveland is, showing a roughly 0.25% and 0.14% out of Springfield, Massachusetts. Not a huge freight booming market by any means, but regardless, if you are in these areas, expect this week to have seen a little bit more activity on the spot market, a little bit more increased rate pressure. You might be able to get a little bit more, $1 or $2 extra out of the the market there, but not a significant change by any means. Just these are going to be the markets that are showing the most increase in tender rejection rate week over week. Looking at our biggest markets in the United States right now, you can see they all have a similar pattern. Coming out of that Thanksgiving holiday, falling. You've got Harrisburg, Ontario, Atlanta, Joliet, Dallas. These are my Power 5 markets. These are kind of the hub markets for the United States. All of them showing a similar pattern. Now, most of them are just dropping. If you look at those middle markets there, Ontario, Atlanta, Joliet, they're all kind of middling around 22%, kind of plateauing right after the holiday. Dallas, however, fell through the floor, continues to be softer. Harrisburg staying higher than it was before the market. So these, these regions, the Southwest, going to be a little bit more stable. Don't expect as much activity out of that on the spot market. Northeast, still active. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to the DHL Supply Chain Pricing Power Index Update. I'm here with Andrew Cox. Andrew, what's the latest?
We slipped 5 points this week, back down from 85 to 80, and we're seeing some signs of weakness, some flashing yellow signs across the market. So the one is on the volume side. We've seen volumes decline about 10% after the Thanksgiving holiday. This is typical. We see this in typically every season, although in previous years it's been between the 3 to 5% downturn, but that's because volumes are at such a high base right now that I'm not really concerned by a 10% drop. But then on the rejection side, we've also seen a decline from a peak of about 28.5 on Thanksgiving Day to now we're sitting under 25, the lowest rate that we've seen since the beginning of November. But at the same time, we've also seen rates inch higher this week while we saw tender rejections and volumes fall down. So that's interesting to note. But I do think there's further strain ahead on the markets. I think we might have the possibility for one more leg up, as Zach was saying, one more ramp into the year end as we go into that Christmas holiday.
Definitely. And I mean, one of the things you mentioned is a lot of changes over the last week, and one of the other changes that we had was an increase in jobless claims. How has that impacted some consumer spending trends lately, if at all?
Yeah, it didn't. Well, this most recent week's data is from December 5th. That's the last day of the data, and I didn't see a direct correlation or any change in that data from the jobless claims. But over here on the left, I've just got total card spending year over year. We've seen this kind of ramp up in the last couple of days. That's good. We've seen a lot of volatility over the last couple of weeks. A lot of that is due to Christmas promotions and holiday sales. So it is clouding the outlook. But overall, we're up 5% year over year on the most recent week, and cumulatively over from November 1st to December 5th, we saw holiday sales up 19%. That's robust. The chart on the right here is just showing that consumers are kind of reverting back to some of their spending habits that they had back in March and April, and that's just spending more online and venturing into stores less. So you can see that grocery, department stores, and clothing as a percentage of online sales have all increased. They're not quite at the levels they were back in April and May, but people are spending more online, less in stores, and that's going to put more pressure on the carriers and especially the parcel deliveries. So we pair that with them, more people buying household essentials online. You pair that with the last-minute holiday shoppers like myself, and you've got some strain on the environment. And
so definitely, as you mentioned, this is going to have something to do with increasing freight volumes.
Yeah, of course. So, like I said, we're down 10% year over year since Thanksgiving. We're up very considerably year over year. I think we're going to see flat-ish volumes moving into the holiday season. We've got a lot of imports, a strong pipeline of imports still coming in off the West Coast, so I think those markets will stay strong. The only caveat here is that post-holiday, post-Christmas, a lot of that freight is going to lose its time sensitivity, especially that retail stuff. So it's not going to have as much pressure on rejections and on rates on the volume side from that stuff coming in after the holiday. But take a look at rejections. Like I said, we have declined from that 28.5 peak, but we're still above 25, or just at 25%. So 1 in 4 loads, electronically tendered loads across the country, is being rejected. And this is the lowest point since November. But again, I think we're going to see another leg up as more carriers start to bracket their drivers and make sure they don't get too far away from their domicile. We're going to see further pressure up on tender rejections.
So a lot of tightening in capacity, and one of the other areas, because of such robust consumer spending, a lot of tightening in warehouses. Where does this kind of look like, moving forward? You said flatten towards the end of the year. Do you think it's going to have any upward momentum going into 2021? I
think so. I think especially on the West Coast, you're going to see increasing warehousing demand. We've already seen that this year with e-commerce and imports exploding on the West Coast. I think you're going to continue to see that into the new year, especially as some of that freight loses its time sensitivity post-holiday season. Just one quick look at the Reefer Market. It is, again, very tight, almost at 45% tender rejections. So about 4 in every 10 loads are being rejected on the reefer side. I expect that to see some upward pressure as well, especially with the colder months. That makes some goods need to be put on reefers, such as paints and canned goods. So more volumes towards the reefers into the colder months. And lastly, we'll take one last look at the truckstop.com van rate per mile. It's inched up again 2 cents per mile this week. It's kind of inconsequential, that 2 cents move, other than the fact that it's now another year-to-date high, and that it came in a week where we saw tender rejections decline so much. So that's significant. You see that the 2019 tender, the rates peaked about a week prior to now. So we're seeing continual upward pressure, which is not typically, which is not seasonally typical, but I think we see another leg up in rates moving into the holiday, and then thereafter will be anyone's game. I think we're going to continue to see strong volumes and tight capacity, but I think we might peak here before Christmas.
So some upward momentum on the way. Andrew, thank you so much for this update. You're working on some really cool stuff. Where can people find more?
Yeah, you can go to freightwaves.com/communities to get to subscribe to any of our newsletters. We've come out with 3, one focused on the retail supply chain, one on the consumer packaged good, and another on the automotive. I am heading the retail one there, so you can go and sign up for point of sale at freightwaves.com/communities.
Awesome. Love it. Thanks so much for joining us, and thank you so much for tuning in. That's going to do it for this week's edition of the DHL Supply Chain Pricing Update. That's going to wrap it up for this Friday edition of FreightWaves Now. Thank you so much for tuning in. As always, you can check us out on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.